Good morning, everybody. Good morning, Pete. All right. So we're getting a bit of a nasty gap down for an overnight. Starting with SPY here, just to in the perspective for SPX. Starting to get a little short-term bottoming action there on a 5-minute. We'll see how far this can get going. If you get the bad ticks there, that's not real, but you can see how it starts to form these pivot lows here, creating support. So 3180, gapping down, it's a significant gap down, to gap down below that green bar, and there's nothing really below here. 3180 into this gap here. And so one of our concepts is, or is looking over to the left, is right here, of course, into this gap fill. Did prices trade above and below? And they did, which has the effect, and as I've seen over the history of my views, of neutralizing this as a reference point. So this level, this little edge right here, 379, this little area, it's not much. And so the gap down creates a void up above. And so we'll see if this actually begins to hold. A lot of times these markets, equity markets and futures, when they have a gap like this, the tendency to turn up at the open, sometimes kind of, I don't know, like a fake kind of a move, and then it drops again. Anyway, so we do have this pattern of consolidation here and a very small little edge of support with a gap below. So as far as longs go, unless you're a scalper, and this could be okay for a scalper, tell you the truth, if it actually starts to pick up some steam at the open, it could be okay. And then we'll see, this being now a created level of support. Keep it in mind at the open. Well, you use this tail right here to see if it hangs here and how much of a support level it can create after the open. So we're going to have this void area. In here to see what could possibly happen. So I'm looking at this, that little shelf right there might be what stops it if it does start to move up, which isn't very far away. See it right there. So we should see. Anyway, so 381, gapping below here. There's the void, SPX. And so since this doesn't update pre-market, gapping below, so it's going to be the same gapping below here, and it's got this area. McGraw mentioned levels. $37.65. $37.65. So makes sense. When we look at areas of support and look at that as okay, you can lean against it. And so gapping below here, it's got to drop further. So of course, we want to see what it's going to do at the open. Right now, it's trying to hold the area. But whatever the premium is there, 37.64, 65 area, it should increase if we get a continuation drop. So that's a good spot. And 37.40 has got a huge open interest there. And so while this bottoming tail is up above, right, 37.50-ish, that's a long way to travel on one day. Now, that's going to do a lot of damage if it's down there at the end of today, of course. But as we look at probabilities, looking at the chart, how much something moves, versus how much it moved recently, and say that would be a monster move. And so then the next question is, well, what's the likelihood of it moving even further than that today? And so we just logically say relatively small. So as far as a credit spread goes, especially one that's going to expire today, and a big move, but with the leverage of SPX, we're like, oh, what could be a real no-brainer trade? And by no-brainer, meaning guaranteed money in your pocket. Use guaranteed loosely, because crazy things can happen. But as we look at what's the norm, and this already, if it goes down here, will be beyond the norm. That should be a good level somewhere in here. So you have to assess it. 38.65 up above. 38.65, I would think, unless some miracle happens, what that could possibly be, SPX will never see that level today. And so you look at probabilities the same way. If this is opening down here and support, any significant support is down here, for it to travel all the way back up there. So when I look at this chart and, in my mind's eye to say, if it went down here, could that form a green bar to get up there? I'll say, well, I'll take that bet. It's never going to happen. So if there's premium there, 37.65 offside. I'm just looking. Yeah, there is. I don't know what'll be there at the open, but that's a good bet. That'd be a good bet. So, yeah, I mean, up above this level and down below that level, and if you can get premiums, when prices, well, like in this case, they're going to be in the middle of those areas, and you can see whatever jiggles around here at the open, um, might be a day to consider an iron condor, considering where it's going to be opening and the distance from where prices are going to be relative to that. And as I'm looking at this, McGraw, and your comment about the symmetry and so on, you're talking about the prices, but as I think about the prices and then relation to where this will open, and then above and below, besides the numbers, the symmetry of distance from what should be the opening price makes a lot of sense. All right, so let's see what the other markets are doing. All right, so part of our conversation yesterday, I think, McGraw, you had asked me about a measured move. Well, that sure as hell ain't happening. Today, well, let's, I always got to back up, because when I look at what's happening now and think about what would have to happen, well, I want to be objective, of course. So if at the end of the day, this was to turn into a bottoming tail bar, what would we have? Those of you that are in the green room or taking the course, and here we would talk about correction bars, right? And continuation patterns. So as far as measured moves happening today, that's not going to happen because we don't have any pattern to support that. But if this was a bottoming tail bar at the end of the day, having traded below here, again, futures, it doesn't take into consideration the gap down that we're going to see on SPX and SPY. But if this was a bottoming tail bar at the end of the day, closing near the high, then I would be making the argument for a measured move higher next week. So we'll just have to see how this all plays out. Right now it's down. We see, again, the bottoming price action that's going on here. And as we always do, when I see bottoming price action on a smaller time frame, I know that it's creating support. But the ideal scenario is when I look to the left, and here's the 15-minute chart. As I look to the left of this bottoming action, and notice the little breakdown failure there, the ideal scenario is for this to be happening here, somewhere in this area, somewhere for it to be happening here. So, this is how I look at things during the day, as to, well, this is moving down. It's stalling there. Why? I don't know, based on looking to the left. Well, I suppose there's a little shelf of support, these little overlapping bars, but this is the significant level here. So coming down here, right, somewhere in here, right, expand it a little bit, somewhere down there, this type of price action would support a bias of, hey, let's get long here and see how far this thing will go. And then look up above and see where there's resistance. It's simple when you have a method. And applying it day to day could be the challenge because we all tend to get in our own way. All right, so Qs are holding up much better here as they outperformed yesterday. And you can see that they are bottoming out in the area of a bottoming tail bar. Okay, that makes sense. But hey, up several days in a row, starting to make a turn. Makes sense that this could go lower. And if it breaks below this level, it could go significantly lower. And that's what we call the power of the void. I explained this yesterday in part of our conversation as to, this kind of a move. That's the price void creation. And this sideways movement is the time correction, which makes that a more powerful or potent type of a void. So even if this goes up a bit, if it eventually rolls down, we talked about this accumulation after a run up, and then those buyers, well, now they're holding losses. They begin to unwind positions, and all of us will be saying, if we weren't in here, to say, hey, where would I be willing to buy this? And so we look at, well, 1300's a whole number. Is there anything there to the left? A little bit. Hey, but 1250 would be a whole heck of a lot better. No, the time correction, two concepts. Think about it from that, what we all know as being a head and shoulders top, right? And which we would call an upside shakeout, call it what you want. When we give something a name, we start thinking, well, it doesn't look exactly like a head and shoulders top. Well, if we look at it from a point of view of, hey, it was going sideways, it made a new high and it came down, and now it's making a lower high, whatever you want to call it, it's a failure to continue to move higher. So as time goes by, and I'll give you an extreme example, let's talk about year 2000 and the market going down, the NASDAQ going down 90%. And then it went sideways for 5, 6, 8, 9 years. Well, how significant is what was to the left at that time on the way down? Common sense would say not too much. So as this, and we actually had this conversation in the chat room yesterday or the day before, whereas Dan was talking about something and then I was mentioning whatever. And so the idea was, or maybe it was an MT Live, as prices were going down, I think it was an MT Live, and we said, well, this level here where it's stalled, at this point, it's going to be very meaningful because it's so close. But over here, after we start getting, maybe this kind of price action over here, well, I then make the assumption that we can get through that because of the time correction. So this correction through time makes whatever levels to the left less potent. And the reality here is because this moved up as it did, there's nothing to the left, which opens up the door to what could be a significant move lower. All right, let's speed it up here. We start seeing similar things. Dow is already down to support, and you can see this bottoming action. So when we look at candlestick patterns, call it whatever you want, bottoming tail, or somebody calls it a hammer, whatever, piercing pattern, whatever that picture is, where is it in reference to what's to the left, the location? So that type of price action after a drop in an area of support makes sense for a short-term bounce. So we can drop to smaller time frames and apply a long pattern. Russell, we talked about this yesterday with the red bar ignored or bear sandwich, so on and so forth, making a new high and coming back in. Now it's sitting on this support here. So all of this kind of looks like a short-term top to me. The internals certainly support it. with sentiment back up into the upper bands. And remember, this is not normal historically for this level and these bands. These bands just adjust for more bullish markets. Normal bearish would be 0.8, and these bands would be lower. So this market is not normal. We don't know that. So that's on support. We'll see if it holds or not. Bonds are up a little bit. Certainly, they typically move in reverse days like this, but no stabilization of any significance. Oil is coming down. That's correcting a bit. I mentioned the dollar last week, this week. Gold flip-flopping back down again. I'm interested to see if this actually begins to form a bottoming action down there. Silver, it's trying to make the turn. That's down. Everything's down. And transports gave back the whole green bar yesterday. So while it's still, up above this resistance and made a new high, well, it's becoming a mess. All right, so now we've got a bull sandwich, which suggests it's going to go lower. So we've got a lot of things that say lower. Some things are at support. Could be a bit of a choppy open. Other than that, we'll see where things end up at the end of the day. To you, Dan. Downside target for the Russell, lower down here. All right, just look to the left. 50 MA. Well, that's the 20 MA. 50 is way down here. I wouldn't make any projections about the 50 until we see what happens over here, step by step.
All right, good morning. So obviously a lot of red on the screen, but actually none of my alarms have gone off of our open. So even though things are gapping against us, we'll take them one by one as always. So I'm not going to go over opens, but if you have a question, ask me. Go right to gappers and earnings. This CLII, big monster gap, nothing to do there. This is our little marijuana stock we bought yesterday. Breakout looks great. Tesla is on my 0 DTE call spread list call idea. And I said that in a video last night. That was going to be my bias. The two drags. Remember I said yesterday with this rally on Intel, I said, could you imagine the pain today if it were to gap under these lows? It's not under them, but that's a nasty gap. I mean, it's $5 off the high. So that's a drag, obviously, in the markets, and IBM is getting whacked even more. 121, look at that. A whole month of data. It is gapping under. Let me look at the expected moves. The expected move in the option table was $5.89 on IWM. So, I mean, that's a big old gap. Intel, it was $3.16. So like 5%. So I don't know what to do with this. It looks horrible. The gap, we'll just see what happens. But I noticed AMD gapping up, and it's not earnings, so I don't know if that's a beneficiary of whatever the heck Intel did. I really have no idea, or if it's just independent news, but they have earnings next week. I think the 26th. Well, that's right, Joe, on IBM. That's right. Right. Remember pre-market here, I'm looking for what I call tier one setups, which are go through my checklist, multiple time frames, relative strength, compelling pattern. And then I'm just watching it in a 5-minute thumbnail at the open. And that's what I mean with IBM. I don't have a bias because I have no idea what it's going to do. But AMD, for example, I got a bullish bias. So AMD, I have in a bottom window here, and let's see how it sets up. But that's a very compelling gap, price void, relative strength with the market down. So now step two is we got to see what it does. Norbert, PGen. PGen's gap, it's a nasty gap under this pivot or right to it. Yeah, it's under this pivot. I don't know. It's a big gap. You got support over here. Put it in a window and see what it does. Yeah, Debbie, we have a general rule. If it gaps under your stop, then give it a 30-minute low. But in terms of a blanket, take your stops out. Yeah, I think that's a good idea because even if something gaps down and then does one more whip and hits your stop and stabilizes. So yeah, I think that's fair. STX. Now this actually had a bullish close. It made the turn here at the 50, but now it's a bearish gap, 60, 65. So I don't know what to do with it. Overstock. It's just going sideways, gapping down. There's no pattern. VIAC gapping down a little. I don't like the way it came in, negating the green bar. I'm going to be so selective on new longs here. On today's CRSR, gapping down 30. It's there's just no great pattern there. It's down 5 bars on support. It's a sell setup pre-market. I don't know. It's just, I mean, I feel like it's a challenge today. Give me a challenge of something that looks wonderful. As of right now, it's hard. I like AMD. I told you I like Tesla as a call spread, maybe 15-minute low. And Thomas is asking about Solo. Yeah, you can add yesterday's high. We actually put on 2 trades yesterday. We bought the stock, stop low, and we also sold the 7-4 put spread with a stop under last month's low, way down here. Long-term out of the money puts. Not a great pattern for long-term, but if it takes out yesterday's low, then it's a swing. The swing short. I'm not sure about long-term. And then you can also sell an out of the money call spread and short it under yesterday's low. ISRG had earnings gapping down 783, no pattern. He's usually very spready. Wall had earnings. I don't see where it's gapping. We'll come back to you. TPK, kind of a bull flag after this power move, bullish weekly. That's worth watching. Earnings. TCBI earnings, can't tell where you're gapping. Earnings, no pattern. Ozark, 3480, gap into resistance, no pattern. OSB, no pattern. Hot and die, Pelletier is asking. It's gapping down, rallying to resistance. It's in a trading range. There's no pattern. No pattern, no trade. I mean, there's nothing of interest for me. Neo, TJ. Analysts upgrade to 80 over today's Friday, over Wednesday's high. I like it. Because then we would have a 1, 2, 3, 4, 5 bar turn at this gap fill. So yeah, over Wednesday. Oh, we actually have a put. We actually have a put spread on Qs that expires today, the 320s. So I tightened the stop yesterday, and we're still $5 away. So it should be fine. And I said, let it expire. So that's fine. I don't need any adjustments. And we also have an IWM put spread for next week. And look at that. When we put it on, it looked fantastic. And then the small caps were selling off a little bit. Let me continue here. Ed had earnings, no pattern, downtrend. I think this is one I was talking to Debbie about one day where I said, you're swimming upstream. It's in a downtrend. CSX earnings. Gap and support, no pattern. EDU earnings, gap and down, no pattern. Earnings, gap down, no pattern. Wow, this is going to be difficult here today so far. Gap down, no pattern. RF, no pattern. Wow, I'm just deleting these left and right. Slob, no pattern. FHB. Maybe, maybe we'll come back to that one. And there you go. There you go. I like that for, let's just arbitrarily say 15-minute high. That's